Hello and welcome. You're watching Ask Profit, a show that gets all your stock-related queries answered. I'm Mahima Vachrajani and with me today is Anushi Vakharia. Before we move on to the quiz and a very interesting conversation lined up for you, let's take a quick look as to how the markets are doing. Well, the Nifty 50 is slightly under pressure, down by about 0.15%. The Nifty Bank also, moving in lockstep with the benchmark indices, down by about 0.1%. The broader markets, in terms of the mid-cap 150, down by about 0.3%. The pressure there is slightly more than that of benchmark indices. The small cap 250, however, is almost flat, down by about 0.06 odd percent. Let's pull up the Nifty 50 heat map and see what counters are buzzing in trade today. Some counters under pressure. Eternal continues to be under pressure, down by about 1.3 odd percent. Infosys down by about 1.2 odd percent. Tata Motors down by about 1 odd percent, followed by M&M, HUL and HCL Tech down by about 0.8 to 0.9 odd percent. But some counters doing well. Asian Paints on the back of that block deal up by about 2 odd percent. Bajaj Finserv, we'll have to wait and watch out for as to who the sellers are for Asian Paints and of course who the buyers are and what is the price at which it is bought, because the stock is up 2%. Bajaj Finserv up almost 2%. ONGC, Sun Pharma, DRL all up by about 1.5 to 1.8 odd percent. Let's also pull up the sectoral heat map and see how sectors are faring in trade today. Nifty Pharma, the top gaining sector today, up by about 0.95 odd percent, followed by the Nifty Media and Nifty Defense, slightly up by about 0.16 odd percent. But something that's not doing well and seeing profit booking is Nifty IT, down by about 0.8 odd percent, followed by Nifty Auto, down by about 0.6 odd percent. Nifty Realty, Nifty Oil and Gas, Nifty Energy and Nifty FMCG down by about 0.5% each. Let's also pull up some constituents in fact on the Nifty IT and see what are these counters that are not doing well in fact. There you go, all counters in the red. There's Coforge, Persistent, Infosys, HCL Tech down by about over 1.5 odd percent. Let's also pull up the BSE 500 and see what are the counters that's actually moving in the border end of spectrum. There you go, the counters that are not doing very well in trade today. Let's pull up those. Some counters like CE Info System on the back of the block deal, again over 5% exchanged hands today, down by about 8 odd percent. Paytm down by about 5 odd percent. Ratan India down by about 4.5 odd percent. There is HPCL which is also down by about 4.3 odd percent. Care also down by about 4 odd percent. Something that's doing well today though in the broader end of spectrum, there are counters like Sterlite, Tilak Nagar up 10%, Tanla Platform, so recovering from yesterday Tilak Nagar, Tanla Platform up 9%, Nava Bharat up 9%, Route Mobile also up by about 5.8 odd percent. But with that, let's also welcome in our guest for the day, Kush Bora, founder of kushbora.com, and Mahesh Ojha, AVP at Research and Securities, joining us now. Welcome to both of you gentlemen. My first question for the day is on it is on Maha Scooter, which is held by Mayank Saraf of New Delhi, who's holding 1,000 odd shares at 7,000 a piece. Let's pull up the stock and see what it's doing right now. There you go. It's sitting on a significant profits of around 77 lakh odd rupees and wants to know if it can add more at the current levels. Mahesh, I'll come to you on this one. He's already sitting on a profits of around 77 odd lakh rupees. What do you suggest at the moment?
I think if any downside nearby 11,500, 12,000, if any downside come, then they can look for further adding, because their question is for adding also. So I think that level could be, they can watch out for the further add.
So that's with regards to where Maharashtra Scooter stands. The next question is on Star Health. Mohit from Ludhiana is writing in and holding 200 odd shares and wants to continue to hold this from a next 3-year perspective. So I'll come back to you again, Mahesh. What do you think? Star Health, is this the right counter to stay invested in, or should he switch to something else?
If you see on the last 2 month chart, then the stock has recovered a lot from lower level. So I think on upper side for a time being 470, 475 range could be kept. So if you're a very short term view, then you should partially exit on the higher level and try to re-enter in lower level that could be nearby 420, 440. But as per viewers' view, that is the holding for a 3-year horizon. I think that can be hold also.
Hold is what we are looking for Star Hill. Next query is from Prabhu from Chennai. He's bought 250 shares of HCC and this is at a price of 336.26 that we are looking at. Kush, want to understand from you whether he should continue to hold this counter or sell.
First up, hi, very good morning. No, he can continue to hold. The stock's actually seen a very smart rebound from those 22, 23 odd level lows. You see the accumulation over the last 2.5 months has been very, very encouraging. Also, the stock actually now crossed above the 200-day moving average and is holding above that, quite smartly. Some negative divergences and some consolidation, over the last two sessions. But you will take that with the kind of move the stock, has shown over the last 2.5 months. So, not a bad idea. Continue to hold. I would, however, place a strict stop loss near the 33 mark. That's the near-term support zone. And on the upside, you could very well look at targets of 36 once that is taken out of 41.5 as well. So with the kind of recent momentum that's built into the stock, you should very well continue to hold this one.
Hold HCC is the view coming in where chats are concerned. Now, shifting focus slightly to Ashok Leyland, the overall MHCV industry has a new government mandate which says that heavy trucks sold in India must have AC cabins. And to give more context on this, we are joined by Puneet Javeri. Puneet, explain us as to how this will impact the entire industry and what all stocks will be in focus. And of course, Ashok Leyland is one of the main companies that will remain in focus.
Well, definitely, and it's a very positive move from the government to ensure safety as well as the working conditions for all truck drivers. India needed regulations like this, and it's finally come in. The first regulation actually came in December 2023, where the government put out via a release that starting from somewhere around October of 2025, the mandatory cabin will have air conditioning going forward. So this was expected to now come in from 1st October 2025. But what does that mean essentially for the industry as well as for the company as well as the MHCV outlook? For that, we are now joined by Mr. Sanjeev Kumar, who's currently the president of the MHCV division of Ashok Leyland. Mr. Kumar, a very good morning to you and thanks so much for joining in, giving us time here at NDTV Profit. I just wanted to first start off with these the new regulations for air conditioning within the cabin systems, and then move on to a little bit for the growth for the industry on the MHCV side as well. So firstly, in this particular move for Ashok Leyland, is the product already ready for you and are you waiting for the regulations to come in October 2025, or are you already giving buyers the option to purchase trucks with air conditioning systems in the cabin?
Hi Puneet, good morning. Just to clarify, Ashok Leyland has been having this range of AC products both in heavy duty trucks and ICV trucks since its launch. And this mandate is from June. Government came out with the mandate in December 23 and then they clarified that it has to be implemented 18 months from this date. So effective 8 June, this mandate is already in place. And as we speak, all our vehicles are being manufactured across plants with AC cabins.
So, sir, are you already essentially from 8 June, you are saying that starting from 8 June, the date which is already gone, all new sales essentially will be will have the AC cabin, is that correct?
All the new trucks which we are manufacturing from 8 June will be of AC.
Okay. And the vehicles which are already manufactured before 8 June, is that the regulation that till October you're allowed to sell those, or is there any clarification that you can give us on that as well?
So this mandate is more about manufacturing, and yes, the channel partners, the inventory they carry, they can continue to sell those trucks in the market.
Got that, sir. And if you can just quantify what is the kind of additional cost this will have, if any, because I'm guessing it won't have too much of an impact on margins. So could you quantify anything on this aspect as well?
See, when I talk about impact on the customers, I would say that definitely it will lead to increase in prices from 1 to 1.5%, depending on model and segment we are talking about. And as a manufacturer, we are passing on this cost to our customers.
Also, just to get into the industry perspective as well, because for MHCV trucks, in the month of May itself, we saw very strong growth for Ashok Leyland, almost 12% as well. Anything specific that worked in the company's favor in this month to report a very strong number?
See, when you look at overall industry outlook, last year was kind of muted, with 3% degrowth for the CV industry. But when I look at current financial year, I would say that we are expecting a single-digit growth in overall MSCV industry, aided by general capex plans by government and growth in the buses also coming from strong order book from state transport undertakings. So overall, there is a rebound seen in some of the core industries also. So I would say that this is fourth year in running when industry continues to stay stable. Generally, in past we have seen after every third year we would see a downtrend, which we are not seeing it now. It's a positive sign for CV industry, I would say.
And so specifically, you said somewhere around mid to high single-digit growth for the industry for Ashok Leyland. Will it be in line with the industry largely, or do you expect some outperformance on that aspect?
So, every OEM would try and outpace the industry growth, and we at Ashok Leyland will also attempt to do so.
And Mr. Kumar, if you can give any in terms of both MHCV truck as well as buses separately, because MHCV truck, as you rightly said, degrew by 3% last year. Now you mentioned within that segment, what is the kind of growth that and is it high single digit, mid single digit, and for the bus segment as well, because last year you shown a very good growth, 19%, and is the revival of the bus segment essentially over the last 2 years that we are seeing. Are you expecting the bus segment also to continue the growth, and do you expect that segment will actually grow in somewhere in the double digits? I'm not asking for a guidance, just any kind of range or any kind of some story if you can give us in terms of the bus business as well.
When I spoke about trucks, as I mentioned, we are talking of 3 to 5% growth in the overall CVs, overall industry volumes, and it is generally guided by the I would say by the response we are getting from our customers in core industries. We are seeing some uptick in steel, cement also, and definitely government capex is really helping us. And when I talk about buses, I would say that there is a very robust pipeline of orders from major state transport undertakings. And similarly on staff and school buses also, post-COVID, we continue to see this segment growing for us. So these are some of the factors which should help us in FY26.
And so my final question to you, largely on macro as well, because have you started seeing spending by the government essentially on the road, on the ground right now? Are you seeing, because the key aspect is that for trucks, and that's something that you spoke about in the conference call as well, that while the freight availability has increased and usage has increased, the truck operators and fleet operators don't actually need to purchase new vehicles as of now, because the utilization is still improving on a trajectory. So just wanted to understand in terms of macro, are you already seeing that on the ground, the spending starting to happen?
See, when you talk about utilization, CV industry has really gone through this transition. In past, a truck would cover 7,000 to 8,000 kilometers per month. But now we are talking of 15,000. So definitely fleet utilization has gone up. And when you look at indicators like e-way bills, it is up 23% last year. GST collections are very encouraging. Even when you talk about, billion tons per kilometer, the kind of tonnage which trucks are carrying, it has really grown 30% in last 5 years. Freight rates, I would say, they have marginally improved. So overall, I would say that, overall macros are encouraging for CV industry. Yes, first 2 months have been flat when compared to FY25. But you would recall in FY25, Q1 was very encouraging. So I would say that we are very encouraged by the way market has moved in first 2 months. And we would expect things to really pick up from Q3.
So pick up from Q3, that's what we are expecting. Mr. Kumar, thanks so much for joining in, giving us a whole host of views for Ashok Leyland as well as for the MHCV industry. We look forward to our next conversation, but thanks so much for joining in today.
Thanks, Tony. Thanks for having me.
Well, Anushi, that's largely on Ashok Leyland. It's very interesting because last year, as Mr. Kumar mentioned, a 3% degrowth for the industry and for Leyland as well. But expecting that mid-single digit at least growth for this year, I think the market is going to look at that number very carefully going forward.
And it's from the third quarter also, as the management pointed out.
Expecting, yes, for the full year. So I think the second half is where we'll see that high growth come in. But at least there are signs encouraging in the next couple of quarters as well. For growth going forward.
Okay, very interesting conversation that we had with that's on Ashok Leyland. But let's switch back to the queries that are there. Now, the first query that we're seeing is Gautam from Mumbai. He holds about 5,000 shares of Federal Bank, and this is at a price of 180 that we are looking at. His query is regarding whether he should sell Federal Bank and move to something like a AB Capital for the next 12 to 18 months in perspective. Well, let's get this query answered from Mahesh. Mahesh, what's your outlook in terms of Federal Bank or AB Capital? Which is your preferred pick over here? Should he stay invested in Federal Bank?
I think he should be invested in Federal Bank. Yes, on last day, AV Capital has given some breakout type of pattern. But yes, I think Federal has a much more potential compared to AV Capital, so he can hold further Federal Bank. I think Federal Bank is doing quite very good. So I think if any, from longer term perspective, I think Federal Bank is good.
Mahesh, just to follow up on that, he's already sitting on a profits of over ₹1,00,000. Do you think partial profit booking should be on the cards, or should he continue to hold the entire stake?
See, if bank is doing very good and quite he's holding from lower level. If he want to book any kind of a small profit booking, then he can book. I think a stock has a potential up to 250, 260, and stock is in consolidation zone. So I think if his horizon is longer term, then no need to worry. He can hold further. But yes, if anyone want to take opportunity for a trading type of opportunity, then partial profit can be booked.
Okay, partial profit can be booked is the view coming in on Federal Bank. Our first caller for the day, Asif, is calling in from Dehradun. Asif, a very good morning to you. How can we help you today?
Yeah, hi, morning. So I have 50 shares of Dixon Technology at 15,000. I have a 2.5, 3-year time horizon.
Okay.
I wanted to know how does it look on a weekly chart, on a longish term chart. Should I hold it or should I exit and get into something else?
Okay, I'll take this up quickly with Kush. Kush, what's your view like where Dixon is concerned? And of course, the 1 week chart, what does it suggest? Is there a further upside?
Well, I think there isn't too much to worry here. I mean, the stock has actually gone into a consolidation. The bias is a bit negative. But despite that, if you see units still hovering around the 200-day moving average, at least on the daily chart, and the volumes on the way down aren't really as worrying. But if you switch the view to weekly chart, as Asif has quite rightly requested or suggested, I think there is a longish consolidation phase that Dixon is perhaps in for. On the downside, you're looking at positional support near the 13,300, 13,000 zone. So that should be held in this consolidation for the stock to continue to consolidate and then rally higher. On the way up, I think what you're looking at is 16,200, 16,500 range that has acted as a bit of a resistance. On the whole, what you need to do is take the entire thing into a bit of a context, which is the stock has been a multi-bagger over the last 2.5, 3 years. So, a few months of consolidation here or there it's not a bad idea and should not be taken very adversely. On the whole, I would suggest from a medium to a long-term perspective, continue holding on to Dixon. The positional stop for this one is close to the 13,000, 13,300.
Continue to hold is the view coming in on Dixon from a medium-term perspective. Okay, our next question is from Kanti Bhai, who's writing in from Mumbai, and he's asking about the stock that we just talked about and just spoke to the management with. In fact, Ashok Leyland is the counter, and he wants to know whether he can continue to hold or exit from a 2-month perspective. Kush, I'll come again to you. What are the charts indicating for Ashok Leyland?
I'd suggest a book profit on Ashok Leyland. The reason being that the stock's actually not really gaining momentum over the last couple of months. If you see, maybe a little longer as well. And while the entire auto pack is under pressure, you are seeing some bouts in some ancillary names, two-wheeler names. But This one's not really participating as much in the rally, and also it's very close to that resistance of 250 mark from where it's turned, even now. So my suggestion would be to, perhaps book profit and exit out of Ashok Leyland. If you want to consider, then an M&M, in the two-wheeler, in the passenger vehicle space is not a bad play.
So M&M preferred over Ashok Leyland. Now that's the view from Kush in terms of where the auto space is concerned. But the next query is a very interesting one that we are looking at. This query is from Naveen Kumar from Hyderabad. He holds about 900 shares of JSW Steel, and it's not a 1 to 2 year kind of a period that we are looking at. He's bought these shares from 1994, and after the stock split, wants to understand whether he should continue to hold on this counter or exit. Wants to reshuffle his portfolio, so accordingly wants some good suggestions in mind. So Mahesh, let me take this one to you. JSW Steel, since 1994, what's your outlook on this one?
I think the JSW Steel is doing quite very good, and he's holding from 1994, so he can hold further. We can see some more upside from these levels. But if you want to switch from any switch counter from medium term perspective to any other sector, then pharma looking attractive from my view.
Okay, so that's the view for JSW Steel. Now, next we have a caller joining us. This is Mant Singh from Andhra Pradesh calling us. Hi, Mr. Singh. How can we help you on the show today?
Hi, madam. Very good evening. Good morning.
Good morning.
My query is regarding Techno Electric engineering, madam. I want to add fresh quarter the entry level service of future prospects for 2 to 3 years, madam.
Okay.
It is EPC and the data center business, madam.
Okay, so 2 to 3 years. And what's the outlook in terms of why you want to enter in this stock?
Because it is consistently increasing the revenue and the profit, and management guidance was very optimistic and very high growth and margin business oriented like that, madam. Yesterday I read the con call, so I am interested in this business, madam.
Okay, so let me take this across your fundamental guests. Mahesh, what can you say about Techno Electric now? He's read the con call. He's gone through the past few years of financial data to gauge the performance of the business. Are you optimistic on this counter as well?
I think yes, he can hold further from a 1 year perspective, but if anyone want to add, then I will advise to add in staggered way manner, because stock in nature is very volatile and low volume type kind of stock. So I think if anyone want to add, then they should add in a staggered way from a 1 year perspective at least, so we can see up to 1,750, 1,800 level. But currently stock can come in consolidation zone and can give some opportunity of lower level. So add in a staggered way.
Add in staggered manner. Kush, do you also reckon to the fact as to what Mahesh is saying? Should he wait for some time to make an entry, or this is the right time to buy?
No, absolutely agree. In fact, the stocks had a very good run. If you see the last 3 weeks, the stocks actually starting to see profit booking. The indicators on weekly and daily time frame are also suggesting that this profit booking could perhaps extend a little. So a good support zone is close to the 1400 mark. Anywhere close to that should be a good entry point for Techno Electric. The medium term structure also looks positive.
So that's the view with regards to where Techno Electric stand. But viewers, it's time to slip into a very short break. But do stay tuned, because we'll be right back answering all your queries on the other side.
That's huge. That is a biggie. It's out there.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
At NDTV Profit, we don't just track the news, we shape it.
What's going to be the game changer is how they are set up to compete against the two players right now.
Prices of dishes will be same in dine-in as they are on the food delivery platform. The cost of the McChicken meal in restaurant is 199 rupees across. But on the delivery platform, you see that both Swiggy and Zomato listed at a 315 rupees price point. But on Rapido's new platform, technically it will be only 199 rupees.
On June 10th, NDTV Profit told you how Rapido was making a surprise entry into food delivery and how that would make the giants sweat.
Are we all claiming that Swiggy and Zomato don't have even a little of the jitters?
We asked the tough questions, we showed you the numbers, and guess what happened one day later?
As of now, you can see that prices of the McChicken burger combo that we had referenced earlier has been slashed from a 315 rupees price point to 199.
Hello and welcome back. You're watching Ask Profit, where you get all your stock related queries answered on the numbers flashing on your screen. Now next we have a caller joining us. This is Mahesh calling us from Karnataka. Hi Mahesh, how can we help you on the show today?
Ma'am, I had a query regarding IFCI share.
Right.
I have taken 118 share with price of 67.74. Should I hold it or can I sell it?
Mahesh, when did you mark an entry in the stock?
When it was 67.74 rupees. Now it is, I think, 63.
Okay. So you want to understand a short-term view on the stock, right?
Yes, ma'am.
Okay. Kush, let me come to you on IFCI. What is your view regarding this counter, whether he should continue to hold or sell? What's your view?
I think he could exit this one. The stocks actually started to see some sharp round of profit booking, and this is much before the entire market also started to see some profit booking. The resistance levels are actually very close to his buying price, so 69.70. That zone is a bit of a resistance for the stock. It did zoom up rather fast in the last 3 out of the 5 weeks prior to them, but other than that, hasn't really done much. So my suggestion would be, from a near-term perspective, you could exit IFC.
Exit IFCI is the view coming in from Kush, where charts are concerned. Our next question is from Venkat Ramani, who's writing in from Bengaluru. He's bought SW Solar, that is Sterling and Wilson Solar, 290 odd shares at 457 a piece, and wants to know if he can buy more at the current levels and hold for a period of next 15 odd months. Mahesh, I'll come to you on this one. What's the view like on SW Solar? He's sitting on a loss of 32,000 rupees right now.
So his question about the adding further. So I think adding further quite in lower level, that could be area nearby 323, 25 zone. So any lower level you can add further. I think stock has a potential up to 375, 400 at least. So if you want to add in lowers, then that level could be watched.
Right, so that's it with regards to where Sterling and Wilson Solar stands. Our next caller, Pradeep, is calling in from Bengaluru. Pradeep, a very good morning to you. How can we help you today?
Madam, see, I'm having 30 shares of Latent View.
Okay.
Purchased at 384. And purchased in August 23.
Okay.
But the share is going nowhere.
Right.
And it is more or less stagnant.
Right.
So I just wanted to know whether I should book whatever nominal profits I have, or should I hold it for long term?
Okay. Got your question, Pradeep. And when you bought this, did you see the fundamentals of the company while buying the counter?
Yes.
Okay.
Yes. I saw the fundamentals and I expected it to give good returns. But unfortunately, it has not done so.
All right. Got your question, Pradeep. I'll take this up with Mahesh. Mahesh, since he's bought this since 2023, and if I'm just checking the CAGR growth of the company, 3-year CAGR growth for sales has been around 28 odd percent, and profit growth has been around 16 odd percent. But still, the stock has not done much as per what he's suggesting, and sitting on profits of around 700 odd rupees. What do you think? Should he continue to hold for some time or book profits at the moment?
I think he has bought in 23. After 23, stock has gone up to 500 mark level. So I think stock is fundamentally is good, and we can expect some upside potential at least up to 460, 475 zone. So he can hold further and try to exit on higher level. Don't greedy on higher level. If you are greedy on higher level, then stock could be rebound again. So I think on higher level, try to exit.
Okay, so that's the view for Latent View that we are seeing. But next query is from Sushila Billari, holding about 405 shares of GSFC, that's Gujarat State Fertilizers and Company. Not much of a profit or a loss that we are seeing currently. Wants to understand whether she should continue to hold or take an exit on this counter. Kush, let me come to you on this one. What's your view on this stock?
So GSFC is a hold. If you see the recent move on this one has been steady but upwards, and also the stock has now broken above the falling trendline resistance, that started somewhere early 2024. So the momentum is turning when the stock actually gives you a breakout, after such a long time. These rallies tend to hold. Nevertheless, the view is hold, and a stop loss for this one I would suggest is close to the 200 mark, maybe just under that. So you can keep a stop loss at about 198. Continue to hold on upside. You could look at targets of 225 and 240 as well. So near-term trend positive. The momentum, however, is not so stark. So it could be a gradual up move, but continue to hold with a stop loss at 190.
All right, so that's with regards to where GSFC stands. Our next caller, Jijo, is calling in from Kerala. Jijo, a very good morning to you. I believe you have a question on Kirloskar Oil.
Yes, good morning.
Good morning.
My question is, I was holding 100 stocks of 896 average.
Okay.
So is this right time to add more stocks? Because I saw the valuation is good.
Okay.
And it's fundamental strong. So I just want to know, this is the time to add or
okay.
not.
Okay, got your question, Jijo. I'll take this up with Mahesh quickly. Mahesh, Kirloskar Oil is already holding 100 odd shares and wants to add more. Do you think that's the right strategy to adopt?
If your horizon is more than 1 year, I think he can add further on these level also. I think stock has a potential up to 1,150, 1,200 odd level. But if your horizon is very shorter time panel, I think 2 to 3 months, then quite add in very low, try to add in lower level. So yes, if your horizon is more than 1 year, you can add further.
Okay, so next is a technical question that we have, and this is from Vijay from UK. He's bought 100 shares of Kfintech, and this is at a price of 1,081 that we are looking at. Currently, if you are seeing his position sitting at a profit of 14,000, wants to understand whether this is the right time to sell for this counter. Kush, coming to you on this one.
Well, I would suggest a partial book profit on this one. The stocks actually had a good run now, 1,300 resistance acting up. But overall, if you see, the momentum is rather bullish, for the stock. So you could well continue to hold, but near the resistance mark, if this rally fizzles out and if the profit booking extends, then you don't want to be caught on the wrong foot. So suggestion would be to book partially here, hold the rest of the quantity with a stop loss near the 1175 mark. That's the near-term support zone for the stock. If that is held, the stock could very well retest 1300 resistance and move higher as well. On the whole, the stock is on a good footing. The medium-term trend for the stock is bullish, so you want to stay on to this one. But yes, profit booking along the way is a good idea. So book 50%, hold the rest with 1175 as your trailing stop loss.
50% and hold the rest is the view coming in on Kfintech technology where charts are concerned. The next question is from Muralidhar, who's 68 years old, by the way, and writing in from Bengaluru and holding 111 shares of BSC at a price of 2648. Wants to know if he can hold or exit at the moment. Kush, BSC was in focus yesterday because it's moved to long-term ASM stage, and because of that the option premium turnover for the entire counter has been weak, because of which we're seeing volatility in the stock. What do you suggest? Should he continue to hold at the moment or wait?
So, look, let me start with the fact that that the trend is bullish. The stock's been a phenomenal wealth generator in the limited time that it has been listed. But now, and I mentioned this a couple of times already this week, which is that the stock is now deep into overheated territories, or at least was until a couple of sessions ago when the profit booking started. And I won't be surprised to see this profit booking extend. So my suggestion would be to exit or book profit in BSE currently. You could well look at accumulating BSE at lower levels, but those come fairly low, close to the 2350, 2400 zones. And it's not that the stock hasn't really given those kind of profit booking opportunities in the past as well. So yes, currently you should exit or book profit in BSE and look to accumulate again. It'll become very attractive around the 2350, 2400 zone. So maybe closer to those levels with a favorable risk reward ratio, you could look to re-enter.
Okay, 2400 is the level that we can look for BSE. But next we have a caller joining us, and that's Shankar calling us from Chennai. Hi Shankar, how can we help you?
Hello, hello madam, how are you?
I'm good, how are you?
Okay, I am fine. Last month I bought Green Power, that means Orient Green shares, 8,500 shares at the rate of 11 rupees and 70 paise.
Okay.
Any chance it will cross all-time high of 30 rupees in near future?
Okay, so a 30...
I want a technical outlook.
You want a technical outlook on this stock. And okay. Let me take this across to Kush then. Kush, what's your view on Orient Green? You see some 30 rupees of a target on this stock. Do you have a similar view as him?
I'm afraid not. Let me just say that the stocks actually had a decent-ish run. The 11 the 11 has acted up well. The stocks held up to that. It's moved higher. You've seen good volume action in the last 3 to 4 sessions, but now it's come up to the 200-day moving average resistance of 16. To answer this question very specifically, can the stock go to those 30, 35, even higher levels? Can is obviously a yes. I wouldn't assign a very high probability for, let's say, the next 3 to 6 months. Even now, if you see the stock is actually hitting that falling trend line resistance, that started somewhere close to the early part of February. So I will perhaps wait and watch. I will keep a tight stop loss near the 11.5 mark. If that is breached, then you're better off exiting the stock. And while it has participated in the near term, I do see some supply pressures coming in from that 16 to 18 zone, in the near term future for this.
Okay, our next question is from Anwar, who's writing in from Abu Dhabi and wants to know if HPCL is the right counter to buy in order to earn a good dividend income is his question. I'll come to you, Mahesh, on this one. In terms of dividend payout, that has been over 30% in the last 2 years for this particular counter. But I have a two-part question to you on this one. Do you think that just for dividend, should you buy a particular counter, irrespective of the capital appreciation, or is this the right strategy to adopt? And plus, of course, your view on HPCL.
I think valuation quite reasonable of OMC companies like BPCL and HPCL. So from valuation perspective, you are getting comfortable, and also there is a dividend yield. So both the point of view, if you are comfortable, then you can buy. On HPCL, BPCL, both the things are reasonable level. And in valuation perspective, we have some more upside in coming time. We can see some more upside. So from both perspective, if things are okay, we can buy the same.
All right. So that's with regards to where HPCL stands. Our next caller, Rudra Maniappa, I hope I'm pronouncing that correctly, from Bengaluru is calling in. A very good morning to you. How can we help you today? Hi, can you hear me? Okay, I think we seem... Hi, yeah, I can hear you. Go ahead. Okay, I think we've seemed to have lost the caller, but we do have his query, Mahesh, and it's again on BSE. It's interesting to take this question because he's sitting on a profits of almost 6 lakh rupees right now. Kush already gave his view on the counter and he said book profits for now. But what do you reckon? Should he continue to hold considering he's already sitting on profits of 6 lakh rupees?
I think he should book partial profit at least because he's holding much share compared to normal shareholders. So I think he can hold partial profit booking, at least 50-60% booking is advisable on these levels. Valuation quite high, and we have seen some ASM regulation on BSE. So we can see some more downside on these levels My level could be near 2250, 2300 odd level where they can review on the for further adding. So I think from these levels, he can book at least partial profit book.
Okay, so on fundamentals, we are seeing levels of around 2,250 to 2,300, and while Kush pointed out that he's looking at entry levels of 2,400. So that's the view on BSE that you can be watching out for. Next question is from John. He's from Chennai. He's asking, he wants a short-term outlook on Morepen. He has about 1,000 shares, and this is at a price of 67.86 that he's entered into. Stock not doing much from those levels. So Kush, coming to you on this one, what's your outlook on a Morepen?
I'd continue to hold Morepen. Stop loss would be near the 63, 63.5 mark. Now, the reason you're not seeing the stock really break out and charge much higher is because the 200-day moving average is at 69.5, and hence, some retracement from those levels, some supply zone, near that is perhaps, expected. In fact, the high that you see for the stock for the day is at 70.5, and it's seeing some profit booking, but still holding ground in the market, which is seeing profit booking. But the volumes in the last couple of days, very exciting. I think, brighter days are ahead for this one, at least from a near-term perspective. So for targets of 71.5 and about 75, I would continue to hold. And, the stop loss, as I said, could be close to the 63 mark.
Okay, so 63 is the stop loss that you should be watching out for Morepen Lab, and 71 to 75 are the other levels that you can keep a track of to hold this counter. But next we have a caller. Lucky is calling us from Ahmedabad. Hi Lucky, good morning to you. Please state your query.
Yeah, good morning. I'm holding 200 shares of Texmaco Rail at the price of 115. So should I keep holding or exit from the stock and avoid the railway sector? Or shall I book the profit?
So Lucky, do you plan to exit the stock considering the overall picture which is going on in the railway sector? Or what was your thinking when you had entered this counter?
Yeah, actually, I found this counter to be, the sales and profit growth was good compared to the peers.
Okay.
So I thought to keep an railway sector stock in my portfolio.
Okay. So let me take this across to Mahesh. Mahesh, what's your outlook on Texmaco Rail? Now, if we see the last 6 months or even the 1 year performance for the railway counters, they've seen a significant corrections, and this has been on the outlook of the overall railway side, increase in competition, even the revenue growth that has been subdued for many of these counters. So, and this is after a significant price increase that we have seen in the 23 and 24 calendar years. Want to get your perspective on Texmaco Rail, whether he should continue to hold this counter or not.
My stance is neutral on the same. So in partial profit booking, at least half quantity should be sold out on these levels. And recently, Texmaco is getting some orders. So some upside could be come, but yes, if you are holding from a lower level, then partial profit booking is good for you. So keep booking partial profit, and rest remain can be hold for a level at least 195 200 level where other can be booked.
So that's in regards to where Texmaco Rail stands. The next question is from Vasant Kumar, who's writing in from Bengaluru. He's holding 2,525 shares of Yes Bank, bought at 23 apiece, and wants to know if he can continue to hold or exit. Kush, what do you suggest?
Yes Bank is an exit for me, has been for some time. All the rise and the bounces have been taken as an opportunity to exit. Even the recent moves close to this 23.5 levels have actually fizzled out. The volumes on the way down are not so humongous, unless you count that big 10% fall that it had, following the news that came about. So for me, Yes Bank is an exit. If you do want to consider, you might as well stick with the other names which have a fairly decent momentum going for them, the likes of PNB, Canara Bank among the smaller ones, the relatively smaller ones. But for safety, you're better off with ICICI and HDFC Bank.
Kush, I'll take the next one with you as well. Now, the next query is someone who wants to seek your opinion on Reliance Industries, holds about 250 shares with a 15% of a profit. Vijay Kirti wants to understand whether continue to book profit or hold this counter. What's your view on Reliance?
We should continue to hold Reliance. It's had a very, very interesting, last couple of months, or maybe last couple of quarters as well, where, it's had a deepish correction, but the recovery also has been very, very exciting, and that's a good move for a bellwether heavyweight stock like Reliance Industries. It's already crossed that 61% retracement mark. It's trading higher above that. So some of the key technical resistance levels are being taken out. Now, historically, also 1450 to about 1475. This has been a bit of a supply zone for Reliance, so consolidation is far for the course. But I would continue to hold Reliance. For me, a deepish stop loss for this one comes close to 1400, 1410 mark. With that as a stop loss, continue to hold Reliance. On the way up, you're looking at targets of 1485 once that is taken out, of 1520 as well.
Right, so that's with regards to where Reliance Industries stands. Our next caller, Sandeep, is calling in from Kolkata. Sandeep, a very good morning to you. How can we help you today?
Actually, I have got 300 shares of Oil India Limited at the rate of 480.
Right.
I want to know the long, medium and short term technical as well as fundamental. 3 to 6 months, maximum 1 year.
Okay, got your question, Sandeep. I'll again take this up with Kush then. Kush, what are the charts indicating for something like an Oil India?
See, the movement has recently been very, very interesting on this one. The stock is coming up to a rounding bottom formation breakout near the 490-500 zone. Remains to be seen whether it takes that out or not. The recent volume action suggests that it possibly might. So with that recent development over the last 2 days, that this the way stock has moved and the volume action clubbed along with that, I would suggest a hold on Oil India, but a strict stop loss near the 455 mark.
Okay, so stop loss near a 450 mark for Oil India. The stock was one of the top buzzers in trade yesterday on the back of Avendus note also, wherein they're seeing more than a 36% of a return for this. But next query is from Piyusha Raj, wants to understand the outlook for Coal India. Has around 875 shares at a price of 439, currently facing a loss of 37,000. Currently facing a loss of 37,000 on this one. Wants to understand whether she should average out more at the current levels which are there, or take an exit and buy some other counter. Mahesh, coming to you, overall long-term perspective on Coal India, what's your outlook on this stock?
I think he can add further if any lower level 390, 388 range could become, then he can add further from Coal India prospect. From fundamental perspective, I think the stock is quite good, and we can see some more upside up to 460, 480 zone range at least. From technical perspective, stock is awaiting for further move above, I think 408, 410. We can see some more quick bucks on Coal India. But yes, from fundamental perspective, I think he can hold further and try to add in lower level.
Hold and try to add at low levels is the view coming on Coal India. The next question is from Chike Govda, who's writing in from Bengaluru. He's bought 1,000 odd shares of Vishal Megamart at 102 a piece, sitting on a profit of 26,000 odd rupees, and wants to know if he can continue to hold for the next 12 odd months. Kush, I'll take this up with you. These tier 2, tier 3 retailers have done exceedingly well in FY25 where fundamentals are concerned because the rural demand was picking up. But in case of Vishal Megamart, not sure if you have enough data right now on the charts. Do you have, or else I'll go to Mahesh?
Yeah, ma'am, I'm going to have to give it a pass.
All right, Mahesh, then I'll come to you. Like I mentioned earlier, these tier 2, tier 3 retailers have done exceedingly well in FY25. What would you suggest? Should he continue to hold for the next 12 odd months?
I think he can hold further. Stock is quite doing very well from a technical perspective, as well as fundamental are improving from retail point of view. So we are optimistic for more upside in coming time, and outlook is quite positive, and we can see some increasing demand in rural as well as urban. So I think they can hold further, at least 150, 160 range could become in if you are holding from a 1 year horizon.
Okay, next we have a caller joining us. This is Vikas from Ghaziabad. Hi Vikas, how can we help you?
Yes, hi. So I have South Indian Bank with me at a price of 27 rupees. I bought this like almost 3 years back, and I've still been holding it. Although it is giving me a profit, but this profit I have gained after a lot of time. I was wondering if I should hold it or should I book the profit and like get away with this.
Okay, so do you want a technical view on this one?
Yes.
Okay, Kush, coming to you on South Indian Bank, what's your view here?
Well, a rather less discussed name, but a good move nonetheless. At least in the recent past, I know, his buying price or his buying date is a little longer. I would suggest continue holding on to this one. It's starting to see some momentum, uptick. The recent resistance levels have also been very easily crossed. Volume action picking up. So what he could now do is keep a trailing stop loss near 28, which is still a rupee above his buying price. Even if he exits, he'll be still at some profit. Although over a 3-year period doesn't really mean much, but it'll still be some profit. Continue holding on. I think on the way up, the stock now has room to move to 32.5 once that is taken out, even 35 as well. I'm rounding that off. So yes, the stock is starting to pick up steam. Continue holding on with a trailing stop loss near 28.
Continue to hold is the view coming in on South Indian Bank. Well, now it's time for the rapid fire round. Kush and Mahesh, you all know the drill. We'll try to ask as many questions as we can and try to keep your answers as short as possible. The first question is on Niva Bupa. Shrikant from Hyderabad has been holding since IPO. Wants to know if you can continue to hold or not. Mahesh, your view?
Hold.
Okay, next question is from Viresh. Wants to understand view on IX. Holds about 660 shares at price of 195. Kush, your view?
Hold.
Okay. Pakshar from Rajasthan wants to invest in a two-wheeler stock from a 3 to 5 year perspective. Mahesh, what would that stock be?
TVS Motor.
Okay. Kanti Bhai wants to take a hold or an exit on SBI. What's your view on this, Mahesh?
Hold.
Okay. Sri Satya wants to further invest in Heritage Foods for the next 1 odd year. He's already holding at the average price of 382. Kush, your view on the charts?
Continue to hold. Keep a stop loss near the 425 mark.
Okay, Joseph holds about 1,300 shares of Bandhan Bank, and this is at an average price of 175 that we are looking at. Mahesh, your view?
I think he can hold further from a stop loss of 168.
All right. Bhairav is writing in all the way from Virginia. He's got 285 shares of Hindalco at 624 a piece and wants a 1 year term outlook on this counter. Mahesh, your view on Hindalco?
He can hold further.
Okay, Varun wants to understand the view on CDSL has about 50,000 rupees to deploy on this counter. Should he wait for more correction or enter the stock? Kush, your view?
He could enter closer to the 1600, 1550 zone.
All right. Som Distilleries is the next counter, and Siddharth is asking whether he can continue to hold this counter from a longer term perspective. Mahesh, Som Distilleries or some other alcohol counter?
He can book on the Som Distillery and try to switch on another counter like Sula Vineyards where policy are favorable.
Okay, Sachin has purchased shares of Rail RVNL. Whether he should continue to hold or sell? Kush, your view?
RVNL continue to hold. The stop loss for this one is at 405.
All right. With that, we're completely out of time on this edition of Ask Profit. Kush, Mahesh, as always, thank you so much for joining and giving us all those insights. Viewers, it's a wrap on this particular edition of Ask Profit. But do stay tuned because Know Your Company is right on the other side of the break.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
At NDTV Profit, we don't just track the news, we shape it.
What's going to be the game changer is how they are set up to compete against the two players right now.
Prices of dishes will be same in dine-in as they are on the food delivery platform. The cost of the McChicken meal in restaurant is 199 rupees across, but on the delivery